Welcome to the Real Estate Guys radio program. I'm your host, Robert Helms. Despite all the doomsday predictions, there is still an opportunity to do well in real estate if you're diligent, careful, and committed. Today, we're going to talk about long-term trends that can bode well for real estate investors. And we've got a great guest who says it's always a great time for something. Today on the Real Estate Guys radio program. Are you achieving everything you want in life? What if there was a time-tested way for you to get everything you've ever dreamed of? The most successful people in life set goals and keep themselves accountable. But how? The good news is that it's not rocket science. You too can learn the skills and unleash the motivation that will create success in your life. Hi, this is Robert Helms, and I'd like to personally invite you to attend Create Your Future, the 2024 Goals Retreat, January 12th to 14th in Dallas, Texas. This unique weekend event has been called phenomenal, inspirational, and life-changing by the thousands of people that have attended. Hear from some of them and find out more at goalsretreat.com. Get your life back on track, physically, spiritually, and financially. Attend the 2024 Goals Retreat on the second weekend of the new year. Visit goalsretreat.com to learn more and get on the advanced notice list. This is no dress rehearsal. Live the life you were meant to. Visit goalsretreat.com or call 888-489-7723 extension 18. That's goalsretreat.com. Welcome to the Real Estate Guys radio program. I'm your host, Robert Helms, and in the co-host seat, it's our financial strategist, Russell Gray.
Hey, Robert.
People are wondering what's going on. There's all kinds of stuff in the headlines. People are talking about the BRICS. People are talking about the economy, interest rates, and the like. And today, we're here to report the good news. And the good news is it's always a good time for something. Not everything in the economy moves at the same time. Not every real estate market moves up or down in concert. I remember when we had the great financial recession of 2008, and the 200 plus MSAs came out as having all gone down year over year in median home price, except one. There was one U.S. MSA that went up. Now, it doesn't matter which one, and I'm not even sure I remember. But the point is, it's easy to get caught up in, well, the market is good, the market is bad, everyone's running to the exit, or everyone's jumping in. It's risk on, it's risk off. In reality, what you have to be able to do is critically think through the what and why behind any investment.
Absolutely. We learned a lot going through 2008. We pay attention to the macro. We don't ignore problems. We examine them. Sometimes people, and I read the feedback on the show, and people, oh, you guys are a little doom and gloom. No. Just because we're looking at what the problem is and we're talking about what the problems are, it just means we're trying to make sure that we really see the field accurately, and we think it's important. If you've only invested since 2010, you've had a great bull run. You've been the beneficiary of a lot of stimulus, a lot of reflation of asset values in the wake of the 2008 crisis. And now we're in a completely different ballgame. I remember in 2004, 2005, Kiyosaki was starting to talk about the dangers in an overheating real estate market. He was early, 2006. But by 2007, some of those cracks were forming, and guys like Peter Schiff and Robert Kiyosaki by 2008 were vindicated for their caution, and a lot of people who were not positioned for the possibility of what happened were hurt, and I'm on that list. And in that very same market where I'm losing everything, a guy like Kenny McElroy is making hundreds of millions of dollars. And so it taught me it's not the situation, it's me. And in the very same market where everything looked horrible to me, other people were finding opportunity. And so note to self, hang around with those people. Try to understand what they think and why they think. And a lot of them are macro thinkers. I say when you see the macro or you watch the macro will tell you where to go. Now, once you get there, you got a lot of more work to do. When you get down to the deal level, do the math, and the math will tell you what to do. But that's all part of how you find the deal. But the point is here is that when you've got people who are paying attention to the big picture, they're watching the trends before it becomes an event, then you're able to move into position where you're going to be on the right side of whatever that trend is. And sometimes you're moving geographic market, sometimes you're moving product niches, sometimes you're reorganizing your debt structure. You want to use adjustables when rates are falling. When rates are at their bottom, you want to use fixed. Sometimes you want to refinance. So we talked to Kenny McElroy some time ago. He was proactively getting in front of this rate rising cycle and refinancing properties in advance and locking in, even though it was a little bit harder and he had to bring in some cash to make it happen. He wanted to buy himself time to let this cycle go through. That's just experience. And then Robert Kiyosaki on the backside was among the first people to write the real book of real estate and going, hey, there's new rules now. It's time to get back in. Well, that was really interesting because everybody's thinking, oh, it's over. But see, Kiyosaki's a guy that's on the cutting edge of where the trend is going, and other people are reacting to what has happened. So we like to interview these people. We like to talk with these people. We like to hear what they think, watch what they do. And when we've got a chance to watch them work over a number of years and we see the kind of results they produce, we're like, okay, we want to do a deeper dive. We want to find out what they're thinking about, what they're looking at. Where do they see opportunity in today's market? Because we have some really unique circumstances in today's market.
So I'm glad you mentioned the macro, because you have to pay attention to the macro. And the big picture is easier to see because people report it in the national sources, and the housing market is doing this. Interest rates are doing this. The problem with just looking at the macro, if you don't get down to Main Street, is that you're led to believe everyone's in concert. It's all going in one direction. They're all fleeing. I should flee. When in reality, real estate especially is based locally. All real estate is local, location, 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 and it's different from market to market. Right now in the housing market, there are markets where prices are coming down. But there are also markets where prices are rising at nearly record levels. Now, some of that's because of the constriction of inventory, and some of that's because people are forced to move and all that. But still, the point is you can't paint it all with a broad brush. At the same time, how do you find opportunity? Well, we're not pessimists at all. We're total optimists. In fact, we say that opportunities are for optimists. Otherwise, they call them pessitunities. We are absolutely looking for where the puck is going and where it can make sense to deploy capital, because big picture is, with inflation at whatever rate, fill in the blank, you can believe CPI, or you can go to the gas station and the grocery store and decide that all my costs in my life are up 10% or 12%, whatever that rate is. When you sit on cash and do nothing with it, you are guaranteed to lose 8 or 10 or 12% every single year. So how do you find something that makes sense in a market that seems crazy? Our guest today is a guy that looks out far into the horizon. We've known him for a number of years. We got introduced to him via a fund that he runs on private notes, which I'm sure we'll talk about. But the much bigger picture is he is sitting in a seat where he's looking at what's coming down, what long trends are, and how you might be able to profit from them. We come back, you'll meet our friend Bob Fraser today on the Real Estate Guys radio program.
Live nationwide. You're listening to the Real Estate Guys. Find out more at realestateguysradio.com.
If you've been listening to the Real Estate Guys for a while, then you've heard about the legendary Investor Summit. Simply put, it's the highest level event we do. And the content, faculty, and attendees are amazing. If you're serious about taking your real estate investing to the next level, consider joining us. You'll spend more than a week with like-minded investors, world-class educators, and real-world professionals, and you'll have a blast. It all takes place next summer, so to get the details before they're released to the general public, send an email to summit@realestateguysradio.com with the subject Summit 2024. We'll add you to the advance notice list, and you'll be invited to spend a fun-filled week learning and networking with more than 25 class sessions and breakouts, plus small format roundtable discussions, great dinner conversations, and a ton of fun. Send an email to summit@realestateguysradio.com with the subject Summit 2024 and be among the first to get the details to join the Real Estate Guys and an all-star faculty on the 22nd Annual Investor Summit.
Self-storage is an asset class that has stood the test of time. Going into the Great Recession of 2008, self-storage had the least negative impact of any of its commercial real estate peers, and it had explosive growth coming out of that time during the recovery. Fast forward to 2020, and you'll see that same pattern during some of the worst part of the pandemic. Hi, my name is Dave Zook, founder and CEO of The Real Asset Investor. Our operating partners are some of the best in the business, and we've had great success over the last decade buying mom-and-pop operated self-storage facilities and taking them to the next level by forcing value through increasing the square footage, adding climate-controlled units, bringing in our professional management teams, and turning the project into an institutional target. We have self-storage investment opportunities available for accredited investors who are interested in investing in this space for cash flow, tax impact, and huge equity appreciation. Reach out to us today at self-storage@realestateguysradio.com.
Hello, this is Robert Kiyosaki. I'm the author of Rich Dad, Poor Dad. And if you're serious about learning how to invest in real estate, listen to the Real Estate Guys. They really know what they're talking about.
Welcome back to the Real Estate Guys radio program, heard every weekend on this great radio station all the time at realestateguysradio.com and all of your favorite podcast outlets. Take a look at the bigger picture today, what's going on, and how can real estate investors read between the lines to figure out where the opportunity is. It's a challenging time, but a fascinating time as well. Please welcome back to the Real Estate Guys radio program, our good friend Bob Fraser. Hey, Bob.
Hey, great to be here with you guys.
Well, it's great to have you here. You've been in the business a long time. And I think just to give the listeners some context, talk a little about your background, because it's fascinating.
Yeah, well, I have been around a long time and, been through several market cycles, went through the whole S&L crisis in the 90s and the dot-com crisis. I actually had a dot-com in the late 90s and grew it up from my attic and my sister-in-law with $100,000 from mom all the way to $44 million in venture capital raised, and, rode that thing up, and it, blew up. We had 300 employees, and then it blew up and I lost everything. And then of course the great financial crisis, and then the pandemic. So I guess that's four. And so each one is different, each one is different. Each one has its own unique characteristics. And the one thing you can be sure of is that whatever the next crisis is, it's not going to be anything like the last one.
That is such a good point. Everybody wants to look in the rearview mirror, and you have to a little, right? Because there is that rhyming we have with history, but there's so many variables. And I know you study this stuff a lot because you sit in the seat where you need to be aware as far out as it's possible to look. Let's talk big picture, Bob, on a macro level. What are the things you're watching, and what are the things that you're interested in and excited about and maybe careful about?
Yeah. Well, and, we take a look at a lot of data, and we tend to come to some different conclusions than a lot of people. I was actually predicting over a year ago that we would have a soft or a landing. I'm predicting sustainable higher inflation for a few reasons. If you actually look at the inflation stats, they track the energy price almost entirely, because the energy is, of course, the mother of all commodities, and all price, everything is based on oil.
Yep.
So based on wages and energy prices, I said, I don't think inflation is going to come down, and not to the 2% range. I think we're going to be in the 4 to 6% range. So I've called all those things, and it also means there's a lot of very good opportunities right now. So. But everything that has its day in the sun doesn't mean it's always going to have its day in the sun, right? And so we're seeing in multifamily, which is one of the investment classes that everybody loves, and it's been a very good performer. We think there's going to be a bit of a reset in these days with there's kind of a syndicator bubble that happened, and people overpaid. And now with interest rates coming due, things just don't pencil the same, as you're well aware. So that's a big trend. We've got a few things we're looking at in energy, and we're very bullish on energy right now for a few reasons, and very bullish on industrial real estate for very good macroeconomic reasons as well.
Industrial's been pretty strong, and this is an interesting area of real estate because it's hard for an individual investor to really get involved. Most of these are pretty large properties and long-term tenants and very unique. But talk to us about the industrial market and what you see there and what you guys like.
Oh, it's insane what's happening. The lowest vacancy rates right now in history. You're seeing the highest absorption rates. So I think we saw last year something like 800 million square feet come online of new construction, all absorbed. What's happening? Well, so in the past, last 10 years or so, it's been primarily e-commerce, but we're seeing the e-commerce growth plateau. So it's not stopping, but the growth is slowing. But we're seeing industrial demand is still going up. What's the deal? Well, it's because of reshoring. So what's happening is companies are moving back to America to manufacture. One, consumers want it. Any buyers want it. So there's huge demand. Everyone wants to have something built in America. You're seeing they're moving chip factories back. They're moving everything back. It was over $1 trillion spent last year by U.S. companies to reshore. And it's actually cheaper, or at least cost the same to manufacture in America if you count robotics. And then you, of course, shipping costs. And then if you discount at all the risk of supply chain disruption. And then the third thing, America is the largest oil producer in the world. So if you want cheap energy, there's only one place to be. And if you want risk-free energy, right? Our energy doesn't have to go anywhere. It doesn't have to get on any ships. And so if you want discount your energy prices, there's only one place to be. America is the only manufacturing power in the world that has energy security.
It's a great example of watching a trend and then uncovering the why behind it. For years, people have gone to places like China for super cheap stuff. Right. We have some interests in real estate development, and a lot of builders and developers want to buy that super inexpensive material that takes a long time to ship. And of course, in COVID, we saw not only did the price to ship go up, but the actual availability. And, Chris Martenson on our summit a couple of years ago says, if you manufacture a widget that has 400 parts and you have 399 of those parts in your factory, how many widgets can you produce? And the answer, of course, is none without that pivotal part.
That's right.
So bringing that close to home makes sense. And then there's all the other reasons it makes sense. And it's so interesting because we've talked in the last couple of months about the office market and how there's a lot fewer people working in offices, the work from home thing's stuck in a lot of places. We have the financing coming due and leases coming due, and that's going to create some. But it's not like people aren't working, because then you look at unemployment and go, wait a minute, everybody has jobs. Well, these are where some of the jobs are going, is this in the industrial sector.
Yeah, absolutely. And the new manufacturing scenario is, fairly technical workers. It's a lot of robotics. It's a lot of logistics. Some of the new factories, they have no lights in these factories. They actually save money by doing that. So
the robot doesn't need to see what it's doing.
It sees with its own little electric eye, Yeah. But they want these manufacturing centers near populated areas. They want them in good areas with good schools and this kind of thing. So it's very different than what's happening or what people would think. And so as we entered this market, we thought, well, let's buy industrial. Well, there's nothing to buy. There's nothing for sale, and the cap rates are insanely low. And so we decided to build, and we actually have in-house expertise developing, and we're doing super well with it, developing, some large, 500,000 square feet type big boxes. And it's a 9-month build, and the city loves us, easy to permit. It's just a dream, and we're just about finished now.
Construction costs are low. Most of the expensive equipment comes from the tenant, not from you guys. Lots of reasons to love it.
Yeah.
And I think there's one other really interesting point, and that is the need for real estate from a manufacturing perspective has shifted a little. Just like today, people want a place in their home so they can do Zoom, right? They didn't need that before, but they need it now. A lot of these manufacturing processes, although you could go into virtually any, generic industrial building, ground up gives them a lot of flexibility in exactly what they need and where it needs to be.
Exactly. And the numbers speak for themselves. I think the last numbers I saw, vacancy rates nationwide are under 3%. I mean, for Class A industrial, it's even less than that. There's a huge shortage of space, even in spite of the massive build. So it's the future, and it's not stopping. This reshoring trend is not slowing down. It's a multi-decade trend, which is what I like. I want to do something where the trends are 10, 20 years, and we're at the beginning of it, and we are.
Well, and you almost need that when you think about the long-term nature of a real estate investment. Not only does it take time to construct a building, and industrial is a little faster than some product types, but at the same time, you're deploying assets and you have a lot of friction to sell. So the longer the trend you can take advantage of, the better. And we've seen you guys, kind of pivot a little bit as the market changes. First time we had you at one of our events, you were talking primarily just about notes. And I know that's still a big part of your business. Can you speak to maybe the note business and how that's changed and evolved for you guys?
Yeah, well, back when we started, and distressed debt was one of the few things that was working, right? with everything's in a cycle, right? Everything. And so there's a great time to be in every business and a bad time to be in every business. And so back when we got started, 10, 11 years ago, distressed debt was everywhere. And so we were buying distressed residential mortgages, and we got really good at fixing them. And that business has been insane. We made our investors a ton of money and have done super well and helped a lot of people stay in their homes, et cetera. And it was great business. Today, if you look at foreclosure rates, they're just at an all-time low. And you look at those kind of things. So it's a very mature business, I guess, for us. And our debt funds are doing well, but they're not the rocket ship growth businesses. It's an income business now. It's kind of matured. But it was a good time for us to look at what is working, right? And some people don't know my story. I started a .com in the late 90s, and it didn't matter how bad your .com was, it went up. And 2001, I lost everything. It didn't matter how good your .com was, it went down. And
right.
And it doesn't matter how good you think your business is, if it's just the bad timing, it's not going to do well. And so there's always something that's doing well. So we gotta have eyes to look at what is going on in the world and what is working. And to me, I want to have a few different, asset classes that something is always doing really well. And I want to have a business that can always soar because it's got 8 legs to stand on, and maybe one is hurting, but I got 7 or they're doing great. So that's really the genesis, and we're kind of wired economically anyhow. So we look first at trends in economics and figure out what is working. Then we figure out how is the best place to deploy capital, the best way to deploy capital.
Our guest today is Bob Fraser, and we're talking about the big picture, and we'll drill more into what that means for real estate investors and where there is opportunity when we come back. We'll also play real estate trivia next. You're tuned to the Real Estate Guys radio program. I'm your host, Robert Helms.
Real estate investment advice right in your mailbox. Sign up for the free Real Estate Guys newsletter at realestateguysradio.com.
Hey, it's Robert Helms. Thanks so much for listening to the show today. I want to personally invite you to come see an amazing real estate market that combines excellent cash flow, offshore diversification, and what we affectionately call lifestyle investing. Come join me in the beautiful country of Belize. The Real Estate Guys have been bringing investors to Belize for more than 19 years now, and our discovery trip is designed to show you the market like nobody else can. Sure, Belize is breathtakingly beautiful. The people are wonderful. And wait till you taste the food. But the real opportunity is the real estate investment potential. How so? Well, that's what you have to come see. There's all types of opportunity in Belize when it comes to real estate investing, including both long and short-term rentals, commercial and retail triple net properties, business opportunities, land acquisition, development, agriculture, and lots more. And as the only country in Latin America with English as its official language, it's easy to understand the law. Property rights are strong, and contracts are in English. And in Ambergris Caye, the top tourist market, a unique situation exists where demand for rentals continues to outstrip supply, creating a compelling environment for investors. So come see for yourself. Join me in Ambergris Caye, Belize as we study the market, learn about the sustainable drivers, and tour lots of beautiful real estate. And like all of our field trips, there are no properties for sale during the weekend. Rather, you'll meet lots of local providers that will help educate you about the market so that you can follow up with them after the trip if the market is interesting to you. You've heard about Belize and the Real Estate Guys for all these years. Now come see what all the excitement is about. Plus, we'll have lots of time over meals and activities to talk about all things real estate. To get the details, go to the website at realestateguysradio.com and click on events where you'll find the Belize Discovery Trip. Once you register, you'll get information about our group hotel rates as well as travel details. So join me in Belize. It's a beautiful country with lots of amazing possibilities. And the only thing missing is you. Go to realestateguysradio.com under events, and I look forward to seeing you in beautiful Belize.
Hey, this is Peter Schiff, and when you're not listening to me at schiffradio.com, make sure and listen to the Real Estate Guys.
Welcome back to the Real Estate Guys radio show. Thanks for tuning into the program. If you want to make 2024 your best year yet, it won't happen on its own. Come join us for Create Your Future. The 2024 Goals Retreat takes place the second weekend of the new year in Dallas, Texas. You can get all the details at goalsretreat.com. That's goalsretreat.com. It's always a great time for something, and we'll continue our discussion with Bob Fraser after we play Real Estate Trivia, your chance to win a prize by knowing today's trivia question, which of course has something to do with real estate. When you hear the question and think you've got a good guess, send it to us at trivia@realestateguysradio.com. Trivia@realestateguysradio.com. Include your name, the answer to the question, and your physical mailing address. The first person that gets it right gets an awesome book called Tax-Free Wealth by our friend, best-selling author, CPA Tom Wheelwright. That can be yours if you know today's real estate trivia question. Last week it was an edition of Ask the Guys, and we asked this: why are most barns painted red? Well, farmhouses and barns across America are traditionally red to save money on paint. Yep, back in the day, farmers were looking for inexpensive ways to make paint, and they used what they had on hand: lime, milk, and red iron oxide, what we would commonly refer to as rust, and mix it all together. Turns out that iron oxide discourages the growth of fungi and mosses, making it a more effective sealant than lime alone. And that's why the majority of barns are painted red. I wonder why people want to paint the town red. Here's our real estate trivia question for this week. The location of Tony Stark's mansion in Iron Man is the same cliff used in another famous movie scene. Which one? Yeah, you know that shot of Tony Stark's mansion out there on the water. Well, that same cliff is in a very memorable scene in a movie that came out before Iron Man. If you want to take a guess as to which movie used this same piece of real estate, send your best guess to trivia@realestateguysradio.com. Trivia@realestateguysradio.com. Give us your name, the answer to the question, and your physical mailing address. The first person that gets it right gets Tax-Free Wealth by Tom Wheelwright. That's today's real estate trivia question. We're talking today with Bob Fraser. And Bob, part of the reason we want to have you on the program is that you do have this long-term perspective. You've been paying attention to the markets for a long time and found interesting ways to exploit real estate opportunity. When we first met, it was the note business that we talked about, and that's still a viable business. Before we're done, I want to ask you about that because I think there's still some awesome opportunity there. But, you know, back in July and August, we did a 5-part series we called The Summer of Syndication, where we were interviewing folks that were syndicating different types of deals, different risk tolerances, different physical marketplaces, different demographics, all of that. And one of the things I enjoy about you guys at Aspen is that you do have different vehicles for different purposes. So maybe explain your model in terms of putting together funds and how that works.
Yeah, well, great question. And first thing we do is we spend a lot of time studying megatrends and macroeconomics to figure out what is going to be working for the next 10 to 20 years, what's going to be the best opportunities. Then we figure out the best strategies. For example, in the previous segment, we talked about industrial. We figured out that's a real growth segment and it's not going to stop, not anytime soon. So then what's the best way to play it? Well, so we're looking at trying to buy it. Well, you can't buy this stuff. It's not for sale. And if it is, the cap rates are insanely low. Well, if the cap rates are insanely low, what do you want to be doing? You want to be selling into those cap rates. And so we thought, well, let's develop. And sure enough, you know, the cost to develop are quite low. I mean, we're doing a 350,000 square foot building in Wichita, and I think our costs are $65 a square foot, all in, including land and everything. And it's going to be worth about double that when we finish here in a couple months, you know, and we'll already have, you know, lines of people looking at it. So those are the kind of things that, you know, then we figure out, well, who do we need to partner with, or do we need to partner? In that case, we have everything in house. So we didn't need to do anything, but that's what we do. We first look at opportunities. We've done storage conversions, taking an old strip mall, doing storage. We love storage. We think it's a good market, you know, seeing a little softness right now, but it's still a good time for storage. We're very bullish on single family. It's very difficult to scale. We love single family. It's been massively underbuilt for the last, 15 to 20 years. You look at multifamily has filled the gap, and there's a lot of construction. But in the last 15, 20, really none in single family. So we love built to rent scenarios, and probably our number one investment that we love right now is oil and gas, which is real estate as well. It's just something that very few real estate guys are familiar with. But we're looking at the cap rates in the high double digits. for producing oil fields.
Well, and obviously there is a vibrant and ongoing need for energy. And as we talked about, or at least alluded to, energy is built into everything. And certainly looking at reshoring or even onshoring, you've got some opportunities there. But there's some unique aspects of industrial. If I'm looking at residential, I need to find a big enough piece of land that I can get the right number of lots and bring in all my, utilities, and I may take that all the way through to finished homes, or I may find home builders that want to buy those lots. And that's going to be based on where jobs are, where people are going, etc. But when you look at industrial has to be located near transportation, and the markets are all different. You mentioned Wichita. How is it that, before we transition into residential, how is it that you identify the physical geographic markets that make the most sense to build new industrial property?
Yeah, first you do have to look at really what is coming online. You want to make sure you don't get into a place that's overbuilt. And there are a few markets that are overbuilt right now. And still, even there, if you did that, I think you're still going to be all right. Okay. It's just, it may take you a year or two longer to realize your business plan, but it's really okay. So getting the market right is first and foremost. And you want something that's not overbuilt. In the case of Wichita, it has a vibrant aviation market, and aviation manufacturing is based there. So it turns out to be a real good market for that, and growth market. Yeah, you need transportation, lots of rail or shipping or freeways, but those things are fairly easy to find. And really, you need an educated workforce. You want to be around a place people want to live. It's no longer, you can't build manufacturing really out in the middle of absolutely nowhere. And then, of course, you need the typical, power infrastructures and water utilities, those kind of things. But generally, it's not as difficult to get permitted, right? In these areas where there's industrial builds, it's not that easy to get permitted. The biggest challenge right now is finding good land. A lot of the land has been snapped up by the big, large developers, but there's still plenty of opportunity. You just got to knock on a lot of doors.
And then, Bob, when it comes to industrial, what is your primary outcome? Are you building these and selling to end users? Do you build them to hold them as leased investment? What makes sense there?
We'll build to flip. As soon as we get it leased, well, we're going to take it to market. We're flippers at heart. We like to take chips off the table,
Well, and especially when you identify such a strong, need, and you see those multiples early on, sometimes the quick nickel is better than the long dime.
Yeah, we do think flex industrial has a huge runway as well. It's kind of in the same ecosystem as when there's a large manufacturer, there's always subsidiary kind of smaller, vendors who are suppliers as well. So we think flex industrial is real good. And there actually is value add opportunities in flex industrial. You get in, and we're seeing a lot of value add opportunities that all you have to do is you're changing the leases. You're just upgrading to a good triple net lease or bringing the leases to market. We've seen the same trends in industrial as in multifamily. You've seen the rents really rising. And so, if the leases haven't been updated recently, there's a lot of room to, just grow the leases, raise your rents.
Well, and again, as you mentioned, there may be some multifamily opportunity coming down the road from people that were maybe not financed well, maybe didn't take rate caps, all of that. But I know that residential is underbuilt. You mentioned that. We've been talking about that a bit here too. And lots of different people have lots of numbers, right? The national home builders think differently than NAR, who think differently than, some of the economists. But I think everyone agrees on one thing, and that is we need more housing.
Right.
Just because of population and the deterioration of existing housing. Tell us about what you're doing in residential. Is it the same thing? You're taking it all the way through, or are you just finding land and converting? What are you doing in residential?
We've partnered with some folks who are doing some rehabs and rehab to rent, kind of flip to rent, if you will.
Yep.
It's small scale. It's very lucrative, but we like to get into businesses. We're scaling. We're liking build to rent, which is really kind of it's not exactly single family. It's more kind of a cross between a single family and multifamily. It has some characteristics of each. We really like that market. We're also exploring, large scale Airbnb markets, but that market has radically changed with post-COVID era. So you're seeing a lot of the numbers that were crazy during COVID are not so good anymore. And then there's all the regulatory, hassles there. So there's a lot of ways we're thinking about playing single family, but we haven't yet identified the one that we want to stick our fork in. I think the one that's probably the most appealing to us right now is build to rent.
Yeah, for a lot of reasons that makes sense. Obviously, the elephant in the room with building residential property is just interest rates, not only from a construction loan point of view, but for the takeout financing. And kind of across the board, we're seeing less number of sales, but pricing is holding pretty good. And same with rents. A little bit of rent softening in some markets, but there's a bunch of markets where rates continue to climb up for tenants. And that's just one more of the inflation issues that tenants have. Everything in their life is costing more, making it harder for them to be owners, which is not all that bad for landlords.
Yeah, we're seeing single family sales all are ticking up again. And, who'd have thought this? Everybody's expecting recession and these horrible interest rates that are just continually getting worse. And, how can anybody buy this stuff? And affordability is going down. And yet people are buying. There's just too much shortage, and nothing has been built for the last 15, 16 years, and there's just a huge shortage. So we would love to do large scale development of single family homes for sale, big tract developments. So have yet to find the right partner and the right place to do that, but that would be our number one. And build to rent is second in our book. Yeah.
Well, it brings up the idea of being a fund, because then you can be more nimble. And the way you guys structure it, you have different funds that do different things. Now, talk about that part of it. So you attract accredited investors to fund most of these operations, do you?
Yeah, that's what we do. We have a podcast called Invest Like a Billionaire, and we educate people on the benefits of private alternative investments versus public markets, and then we place them into various funds. Generally, it's a syndication of each different deal.
Well, the last time we had you on, it was a few years back. We were talking about the note fund, and that's still going strong. Give the listeners an idea of what that would look like, because I could be an individual lender or I could buy an existing note. But being in a fund has some real advantages.
Oh, yeah. You definitely want to be in a fund. You don't want to own one note. So we have, I think about 1,500 notes in our fund. It's a little, near $100 million fund in equity, and pays 9%, pays monthly. It's been audited. It's got a 10-year track record. It's made it through the COVID crisis unscathed. And we buy discounted debt, basically, and high yield debt. And we're very, very good at managing it. So, and the fun thing is, because it's got so many notes, we have liquidity, internal liquidity. So you just request liquidity when you want it. And we've never failed to meet a liquidity request because these notes all self-liquidate, right? So every month we have, 30 to 50, 60 notes that pay off, and we get paid off as the lender. Well, that gives us, millions of dollars, and pay any redemption requests first. And then anything left over, we go shopping with. So it's a great little business, and just absolutely rock solid and a lot of fun. And 9%, who hates the 9% returns, right?
Well, and especially, watching over the years at this liquidity part, because nobody's going to invest in a fund expecting to want to pull the money out in 3 months or 6 months. But the fact that you're big enough that if something comes up for somebody, you could, and I know you don't promise that you can, but so far you've been able to do that because just of the size of the fund. And it's one of the big advantages to investing that way. You certainly could invest in a fund of 10 notes, and that would diversify your risk a little bit and so forth, but you're not going to have that liquidity. So it's fun to see that happen. Talk about some of the higher growth stuff where there's maybe a chance to earn a little more than 9%.
Yeah, well, all of our deals, we're doing better than that. Of course, we've got a bunch of multifamily, did a storage conversion. Number one is oil and gas, and a lot of real estate investors are afraid of this, and I get that, but we're just buying an asset that's 140 producing oil wells. We're syndicating the entire fund. I know a lot of guys are syndicating a single well, which I would never do in a million years. Don't advise anyone to do that. It's 140 producing wells, and we're buying it at a 19% cap rate, believe it or not.
Wow.
And that does not include the proven undeveloped reserves of, thousands of acres of land that we have that's proven undeveloped reserves, which is a actual mathematical legal definition, means the hydrocarbons are there. Anyhow, we think it's an incredible time for oil and gas. I mean, there's no shortage of demand. We know that. But what's happened is because of the ESG initiative, the world has gone away from funding this stuff, and private equity is not doing it. The banks are moving out.
Yep.
And, John Kerry has been running around making sure that all the oil and gas development in the United States is defunded. The only thing they're accomplishing is ensuring that energy prices are going to stay high, which I'm good with, right? As long as I'm on that side of the pump. And so it's really an incredible opportunity, really a generational opportunity in oil and gas. And so what's happened is investment globally. So energy is a declining asset, right? You typically see between 5 to 7% declines per year. And in order to maintain production, you have to invest. Well, energy investment globally has dropped 55% over the last 7 years.
Wow.
And so the world is going to have an energy crisis. And as soon as demand rises, which it will, as soon as China comes back online, or we start getting high growth anywhere, you're going to see demand increase. And as soon as it does, there is no more supply to meet it. If there is no energy crisis, any kind of geopolitical crisis, if you will. And a 19% cap rate, by the way, is at $65 oil. So if oil goes up to double digits, it's kind of lights out. I love deals like that, right? If I'm wrong, I make great money. And if I'm right, I make insanely great money. Those are the kind of deals we like to do.
Absolutely.
So it's an overlooked asset, and investors should educate themselves on it and get comfortable, because a lot of people have made a lot of money in oil.
Oh, for sure. And I think it's just like we talked about with the note funds, the fact that you have multiple wells, it can be very hit or miss. And two basic ways to invest in energy, exploration or production. And still, we take our best guess, and the geologists do. And you don't know exactly what it's going to take to get to that oil, how it's going to look. So by being in a fund that has lots of different wells, that certainly smooths out the curve a bit. Well, this has been fascinating stuff, and it's always good to talk to you. I remember after the last Secrets of Successful Syndication, we got to spend a few minutes at the cocktail party, and we're excited to have you back. You're going to be at the Secrets of Successful Syndication coming up October 6th and 7th, and have a little bigger role this time. We're going to ask you to share some of these macro trends and what you guys are seeing. And just as a guy that's raised a lot of money from a lot of sources over a long period of time, it'll be great for people to pick your brain. But appreciate all your time today and your wisdom, and we'll look forward to seeing you in October.
Yeah, I look forward to being together with you guys again, and meeting all your listeners again.
There's Bob Fraser from Aspen Funds. If you're interested in what they do and want to learn more about the funds, just send an email to aspen@realestateguysradio.com. That's aspen@realestateguysradio.com. Better yet, come on out to the Secrets of Successful Syndication, where you can hear from Bob, shake his hand, and learn more up close and personal. You're tuned to the Real Estate Guys radio program. I'm your host, Robert Helms.
Need help with your real estate investment portfolio? Check out the resources page at realestateguysradio.com.
The Real Estate Guys are throwing a party, and you're invited. Join us at the New Orleans Investment Conference, November 1st through 4th. Now in its 49th year, it's the world's longest-running investment conference and features some of the biggest names in economics and investing, including James Rickards, George Gammon, Danielle DiMartino Booth, Rick Rule, and Peter Schiff. The Real Estate Guys are speaking in multiple sessions, attending lots of others, and we're hosting an invitation-only party one of the evenings for our friends and listeners, including some VIPs for you to mingle with. So make your plans to join the Real Estate Guys at the New Orleans Investment Conference. With all that's going on in the world, no serious investor can afford to miss it. Send an email to neworleans@realestateguysradio.com and we'll get you all the details. That's neworleans@realestateguysradio.com. And we'll see you there.
If you love real estate and have always wanted to own your own business, listen up. The Real Estate Guys and their panel of experts want to teach you how to go full-time fast in the real estate syndication business. These next few years may go down in history as one of the best times ever to acquire investment real estate. There are deals everywhere if you know where to look and how to assemble the resources. The Secrets of Successful Syndication seminar will show you how to make big money doing big deals from a team of experts that have syndicated projects stocks totaling more than $1 billion. Don't wait for someone to give you a raise or create a job for you. Attend the Secrets of Successful Syndication and learn how to build a team, raise capital, find deals, and make full-time money in 6 months or less. Go to realestateguysradio.com and click on events. All the big players use syndication as a way to diversify risk, optimize profits, and earn big money. You can too. Go to realestateguysradio.com and click on events.
Hey, this is David Green, author of Long Distance Real Estate Investing and the Burr Book, and host of the Bigger Pockets podcast. And you are listening to the Real Estate Radio Guys.
And welcome back to the Real Estate Guys radio program. We're so glad you're here. We'd be even more glad if you came out and met Bob Fraser and the Real Estate Guys at the Secrets of Successful Syndication. It's right around the corner. First weekend of October in Dallas, Texas. Get all the details by sending an email to syndication@realestateguysradio.com. Well, I'll tell you, at our last syndication event, I had a chance to spend about a half an hour with Bob, and I'd met him before, heard him speak before, was impressed with his company and his son and all of that, but I really got a new feel for him today.
Yeah, I had a chance to see him deliver a presentation talking about some major trends that he was watching that he felt were changing the landscape and providing challenges and opportunities that he was looking at how is he going to navigate. Of course, he's talked about some of this. We've been talking about energy for a long time. Chris Martenson taught us energy is the economy. And so just like back in the day with Richard Russell, who did Dow theory, he would look at transportation. He'd say, hey, if the trucks are moving a lot of merchandise, that means business is good. And he felt that that was bullish for stocks. I think if you want to look at what's going on price-wise or economic activity-wise, you got to look at energy. And there's no real viable, inexpensive alternative to compete with oil in particular. And so there's still a lot of opportunity in oil and gas. And the fact that we're trying to make this move, as Bob alluded to, away from fossil fuels into alternative clean energy is just going to create more shortages in the only energy that we have right now that works. And so that can be very bullish if you're on the right end of it. It's going to be tough on you if you're on the wrong end of it. And so that could have other effects. Of course, that we talk about when prices go up, it affects interest rates. So all of these things are integrated. It's really interesting. But I love the way that he looks at the macro trends and he looks to invest in things that are not just a short-term trend, which I would call a fad, versus something that is a multi-decade trend. And when you can invest in real estate for the long haul, you may get it right on the short term. You buy it and a couple of years later, you're able to sell and exit with a bunch of money. You still have a problem. You end up with a bunch of money. But if you can get in for a long-term trend or in a market where you're willing to stay long-term and ride that long-term trend, that's where real estate can really be your friend.
100%. And the great thing about it is it's easy to find the information. Now, by easy, I mean what Jim Rohn defined easy as, something you can do. No one's going to bring it into your inbox or knock on your door and hand you a report, though. You do have to go out and pay attention. I love the fact that Bob and his team are always looking at this stuff, and then they take action, right? Our motto, education for effective action. The most important thing you do is to do something. There's a lot of intellectually stimulating people that, listen to podcasts and read reports and subscribe to newsletters, and they can talk the talk, but they aren't taking action. And this is a time when people are hesitant to take action. We know a whole bunch of people that raise private capital, and the feedback we're getting across the board is that it is harder than ever to get investors to commit right now because of all of the uncertainty. George Gammon always says there's never certainty, there's only probability. And when you take a look at where the puck is going and what trends are happening and why, and you understand what's underneath that, well, then you start to put the probabilities in your favor. Nothing says that he's right or these investments that they're in are going to do well, but he's done enough of his research that I know his investors feel confident about the why behind the investing. And it leads to something that Ken McElroy always talks about. It's not about the numbers. It's not about the demand. It's not even about the property in the market. It's about the story. And Kenny and Ross only purchase something if there's a story that makes sense. It's palatable. They say, here's the plan. Here's where the property is. Here are some of the trends in the area. Here's demographics. Here are the rents. Here's the comparable properties. And our plan is to do X, Y, and Z. And people go, well, that makes total sense. And it does because they apply the same methodology. So I think there's just a ton to learn from today's episode, and I would go back and listen to it again because I know there's some good things that Bob threw out there pretty quickly. Also, Bob's going to be at our Secrets of Successful Syndication event, which is coming up October 6th and 7th in Dallas. Got a nice full room of folks coming, but we'd love to add your name to the list. It's going to be great to get not only his full presentation, but also be able to ask him some questions.
Well, if you really think about it, when you are in an environment where there is a degree of fear, uncertainty, and doubt, and people are hesitant to act, you might say, hey, I want to sit this out till I can see which way the wind blows. Well, that's fine. But there are going to be some enterprising people who are the first people to step out into the marketplace, call it putting in a bottom, call it being the thought leaders, and the people who are going to be the trendsetters, and then the other folks will come in behind those people. You don't need to be a rocket scientist to figure out that the people who act early are going to be the ones that get the best opportunity because they're going to ride the wave of everybody else coming in behind them. And so the thing is, don't just act without doing your homework. But when everybody else is hesitating, it's a great time to lean into doing your homework. And part of that is going out and building relationships with people and getting into conversations with people who are great at doing homework, who have been doing homework for a long time, who have a lot of experience investing in all kinds of market cycles. And you may not think that some of us older guys don't quite get the social media or some of the tech and maybe the digital assets and whatnot. But the one thing we do get is market cycles. The one thing we do have is a 30, 40-year perspective. The one thing we do know is what happens when interest rates go up, interest rates go down, bond markets go up, bond markets go down, political turmoil ensues, there's wars or rumors of wars, there's controversies of various types. The one thing that we know is that people get up every day and go to work, and they need a roof over their head. They need a place to run their business. They're going to go out and entertain themselves. These things happen no matter what. They may not happen at the same scale, but these activities are central, core to human existence. Real estate is core to human existence. And so you don't have to get a lot right. You have to get a little bit right. But just the fact that you're in the real estate space, if you're looking at things that are attached to macro trends, which are really hard to deny, whether it's a demographic like residential assisted living, for example, and the baby boomer tsunami, the move to distribution through e-commerce and the shift there, the fact that certain geographies are attracting people because of their quality of life, lower cost to do, friendly business environment, lower tax environment. Those trends aren't theories anymore. They're proven. We've talked about them for 10 years, said, hey, this is what we think is going to happen. Well, we've begun to see it happen. So the best investment you can make is expanding your mind, expanding your network, and getting in a position to take action. So as soon as you do see the break, you're ready to go.
If you want to join us at the Secrets of Successful Syndication, just send an email to syndication@realestateguysradio.com. If you're interested in what Bob does and the funds that they have at Aspen Funds, simply send an email to Aspen, ASPEN, Aspen@realestateguysradio.com. You'll get his report. You'll also get his contact information. But better yet, come on out to the Secrets of Successful Syndication, shake his hand, and ask him some good questions because he'll give you some good answers. Hey, it's not too late to get on the advance notice list for the 22nd Annual Investors Summit at Sea. We're getting back on a cruise ship. It's going to be amazing. Wait until you hear the faculty, and you're going to have to wait. But for now, get on the advance notice list at our website at realestateguysradio.com. Just click on the button that says Summit. Big thanks to Bob Fraser for sharing his great ideas and information today. Next week, we've got an outstanding show for you. Until then, go out and make some equity happen.
This episode of the Real Estate Guys radio show is brought to you by Paradigm Life. Powerful cash management strategies using life insurance. Learn more at beyourbank.com. Mid-South Home Buyers. Low-cost, turnkey cash flow properties in Memphis, Tennessee. Corporate Direct. Asset protection strategies for real estate investors from attorney and Rich Dad advisor Garrett Sutton. Find these and other great companies under the Resources tab at realestateguysradio.com. To learn how you can expose your product or service to the Real Estate Guys audience, call 888-489-7723 extension 4. That's 888-489-7723 extension 4. Or use the feedback page at realestateguysradio.com. Thanks for listening, and we'll see you next week right here on the Real Estate Guys Radio Show.